This is Craig Haugard with your Financial Issues Ag update for December 6th. Well, corn was higher on Friday as speculators viewed the COVID sell-off as a buying opportunity. Here in the U.S., we have seen farmer selling of corn dry up as most producers are waiting for a post-harvest rally. In South America, Brazil's first corn crop is now 80% planted, and analysts are projecting that the second corn crop will have increased acres, and that, coupled with good weather, has traders talking about the potential for a very big South American crop. Now, Argentina has been suffering from a dry La Niña pattern, but recently the corn growing area has been receiving rains that kind of defy that La Niña pattern. That increases the odds that the crop in Argentina could be larger than what was expected just a couple of weeks ago. At the close, the March futures were 7.25 cents higher, selling at $5.84 per bushel. Soybeans have erased the losses that were caused by the Omicron panic sell-off. The current rally seems to be driven by soybean meal as the high lysine prices are driving livestock feeders to put more meal into the rations. It's especially true of hog producers. At the close, the January soybean futures were 23 cents higher, finishing at $12.6725. Wheat pulled back sharply after Russia indicated that its second-half season export restrictions would be set at the normal rate of export. The February 15 to June 30th limit of 9 million metric tons was nearly double what the trade was expecting. Additional pressure came from the north, with the Stats Canada updating their wheat crop estimate to 21.6 million metric tons, and that's higher than the 21 million metric tons that the USDA is currently projecting. At the close, Minneapolis March futures were 24.75 cents lower at 10.3625. Kansas City was down 16.5 cents to close at 8.22, and Chicago futures dropped by 11.25 cents as they ended the day at $8.0375. Cotton futures seem to have stabilized after their recent losses. A report by the International Cotton Advisory Committee on Friday stated that the coming season looks like a promising one for cotton farmers, with high cotton prices expected to continue through the 21-22 year. March futures were 50 points higher on the close to settle at 104.20. Livestock futures were weaker straight across the board on Friday. We had February live cattle down 62.5 cents, closing at $138.95 per hundredweight. January feeder cattle dropped by $1.65 to settle at $164.12 per hundred. And February lean hog futures were also lower, ended the day 50 cents lower, closing at $81.50 per hundred. Class 3 milk futures staged a pretty nice rally to end the week. At the close, December futures were up 27 points, settling at $18.60. And meat cutout values were mixed. Choice box beef was $2.34 higher, closing at $274.36. Select boxes rose by 39 cents, settling at $258.64. Pork carcass cutout values, on the other hand, really struggled. They were down $6.72 for the day, ending at $81.37 per hundredweight. This has been Craig Haugard with your Financial Issues Ag update. We'll be right back with more financial issues after this.